1 or 2% beat. On a year-on-year basis, I think the growth is closer to around 15% on Maruti. But that stock has moved up. It's that sort of a day, right? Mild beat, the market likes it. TVS, we saw it in Maruti, both those two stocks moving higher. And Eicher Motors, the CV part of their business, there's a mild 2% growth on a year-on-year basis as we speak. And that stock is, holding with some gains, 1.5% gain. That's a smaller part of the business. The bikes is the key driver of those earnings in there. But Hormaz, trust him to come up with some interesting data on mutual funds playing the EV battery theme. Hormaz, take us through this electrifying piece, so to call it.
Well, there are certain buzzwords that have been doing the rounds all these months, and one of them is electric vehicles. And there are a lot of components associated with the electric vehicles, and one major one is batteries. And playing that theme through two major stocks, which is Amara Raha and through Exide. Now, what we've gathered is that over the last 12 months, mutual funds, the domestic ones, have been steadily increasing their stake both in Amara Raha and in Exide. Now, you take Amara Raha first. From December of 2022, when funds had around 1.3% stake in the company, as of December of 2023, that has gone up to 6.2% at the close of last year. Some of the major funds there, Kotak Small Cap Fund has a 3.5% stake, Nippon India Multicap has a 1.2% stake there as well. Now, when it comes to Exide, they have domestic funds have a larger stake there compared to Amara Raha. In December of 22, they had around 10%. That has gone up to around 14% as of December of 23. Some major funds there is also Kotak, which is the tax saver scheme, which is around 5.5% stake. And Aditya Birla Sun Life and the DSP India Fund also have close to 1.5% in that. Now, when it comes to foreign investors, Amara Raha is the one that has a greater stake compared to Exide. Now, FPIs at the start of December 22 had close to 35.5% stake. That has come down as of December 23, but that is because the Clarios ARBL sold off their remaining stake in the company in a block deal that took place in July. And since then, as of December of 23, that stake is down to 24%. When it comes to Exide, the FPI stake there has remained largely flat. It was 11% in December of 22. It's close to around 13% as of now in December of 23. Now, what are these two companies doing when it comes to playing this EV theme? Exide is playing this through its subsidiary, which is Exide Energy Solutions, and they are pumping in the money there by the dozen. And they have so far invested almost 2,000 crore rupees in that subsidiary, and they are into supplying lithium-ion battery modules and packs with a 1.5 gigawatt hertz capacity, and they have a 700 crore order book which is going to be executed in the next 12 to 15 months. For Amara Raha, they have an initial, they are foraying into the lithium-ion battery packs manufacturing with an initial capacity of 2.3 gigawatt hour. And that capacity will be ramped up going forward, and they are going to undertake a capex of around 1,500 crore rupees over the next 2.5 years. Now, these two stocks, as funds have increased stake, the stocks have also done well. Amara Raha is up 50% over the last 12 months. Exide has been the outperformer. It's up 85% as well. Now, these are the two stocks, but anything related to EV, that mania is there on the street as well, because recently there was this IPO of Exicom Telesystems, which is a developer of EV charging solutions for both homes and industrial enterprises. That IPO was subscribed over 130 times, and the retail portion was also subscribed over 100 times. Well, the mutual funds got it right this time, at least in the EV battery pack so far, and they have made money for sure.
Hormaz, absolutely. Mania is probably the right word. The IPO that you mentioned, Exicom, only 30% of their business, by the way, right now is EV charging. We're looking to grow it, but it's 30% as of now. 70% is charging solutions for mobile towers. But anyway, EV is the word and the market absolutely loves it. Thank you very much.